Hello and welcome to etbfsi.com by the Economic Times. This is FinTech Diary, and in this chapter of FinTech Diary, I have with me Anurag from OneCard. Anurag, glad to have you.
Thank you, Amol. Glad to be here with you.
So it's a pleasure because I have been running this FinTech Diary since really long time, and it's good to have you on this particular show. To begin with, I have a very important question. One, you do not charge fees on your credit card or the card that you issue. You do not charge your annual fees. You don't even make any charges, but still you offer a metal card. Boss, how do you make money?
So it's very simple. See, credit card is a very long tenor product, and we are riding on the digitization of commerce and also digitization of Indian society, where consumers wants to do transactions online.
Right.
So as long as we can offer the engagement consumer wants to have with our product, we have enough revenue streams to manage. Having said that, I think one has to acknowledge that we have close to 500,000,000 people using UPI for payments. Credit is a natural extension to that. And all of these are investment from our side to drive consumers towards getting affordability as far as credit is concerned.
Right. So obviously, I mean, there is a huge gap about credit. Everyone thinks that credit should be democratized. So you are in that segment now. But how has been your experience? What was that one thought with which you started OneCard, and where are you today? Are you think that you are still in the line with the thought that you had?
See, I'll tell you. So when we started this 6 years back, we were lucky to see three big tailwinds. One, commerce was getting digitized. I think it's all there. Every category we have, consumer wants to shop online.
Right.
UPI created the infrastructure. But other third important tailwind was the digital public infrastructure, because for unsecured credit to grow, data is the biggest ingredient.
Right.
So we saw an opportunity to build a platform where banks can lend to end consumers using our technology and services as far as unsecured credit is concerned. And credit card is a very interesting product. While on one hand it's a risk product because there is an underlying risk involved here, it is also a payment product. It has to work all the time. Anyone wants to use it. And third, consumer expectation from this product is engagement. Looking for rewards, benefits, offers, and merchants want to use this platform to drive traffic to themselves. So we saw a fairly good use case for a tech and data platform to come in between, which is direct to consumers, and which is what we built. And it's been 6 years, and I don't think I'm going to change anything of that. Any of that, my thought.
Fantastic. I think it's sticking to one idea even after 6 years, where the products are changing and the models are changing in the world of fintech every year.
And I'll tell you one more nuance. So if you look at India, we have around 1.4 billion people, close to 900 million adults. Half of them have access to credit. They are there in the bureau, and half of them are not in the bureau.
Yes.
Okay. We thought that if we want to be a reasonably large player in enabling credit for banks to end consumers, it's also our responsibility to make sure that we teach our consumers how to manage credit responsibly. Hence, the first product we launched from our company was a product called OneScore, and we're very proud of that because that is a product where consumer comes and track their score, learn about a good credit habit, build a credit responsibly. At the same time, they're also accessing credit for their day-to-day consumption needs.
Fantastic. Tell me something about the whole credit card ecosystem in India, and what is your observation about it? A lot of people are also trying to get into the credit card space, but before that, I think largely we have some 10 to 12 credit card customers in India. Uh, how important this business model is for you, and is this really making a business for you? Are you profitable? How long did it take to become profitable? Because you're there in the market for last 6 years, Anurag.
So, credit card, is a fairly large category. Now, first of all, regulatorily only banks are allowed to issue credit cards. So, this space is dominated by big banks. Even within banks, there is a massive concentration because this is a fairly large scale business required heavy duty investments in technology, in marketing and risk management and upfront investments. So that's why the big four banks have a very large market share, and they partner with almost every large merchants as co-brands. Now, just to give you a sense of the market, India has grown from close to 40-45 million credit cards to almost 110 million credit cards in last 6 years. The credit card volumes have actually tripled from almost 75, 80 billion dollar of spends per annum. We have almost close to 250 billion dollar per annum spends. And this is primarily because on the both sides, while there is a payment acceptance happening, a lot of merchants are accepting payments digitally. At the same time, more and more consumers are using these kind of instruments. So there is a very large opportunity, and we have almost 400 million Indians in the bureau. So we still have a very large growth curve left. This 110 million cards I mentioned belong to close to 45 to 50 million individual customers.
Right.
So very low penetration in the market. And look at UPI, it's close to 500 million. So you can imagine such a large growth curve is there. We're also seeing emergence of new products coming in, like credit line on UPI, credit card on UPI. Most of these products are solving similar use cases. And the technology and data stack which we have built for banks will be used for these products as well. We're going to innovate on that. We are already a TPAP. We already process UPI transactions as a tech company. So we see a very large opportunity for that. Now, we are not yet profitable. We'll become profitable in due course of time.
Fantastic. Has your cost of acquiring customer come down? How much did you spend to acquire your first customer versus 6 years later now?
Oh, definitely. If I talk about, I was a banker before, so I've been exposed to this industry for more than 2 decades. Forget about last 5-6 years have been dramatic for the industry, not only for us but for the industry, because just the sheer number of digitization allows us to acquire customers much more cheaply. And also I would say there is a very large scale demand. Barring the on an average, India issued close to 2.5 million credit cards a month in last year. And all this data is available publicly thanks to RBI. So you can say that if 2.5 million cards have to be issued, we need almost 6 to 7 million applications.
Yes.
Which is, if analyze it, you're almost talking about 90 to 100 million applications. This is a very large demand curve. So what I've read is definitely not only for us, but for the industry, the cost of acquisition has come down because there is a very large demand curve. The second part is, from the regulation side, a lot of data structures are available digitally. So now we have video KYC that allows customers to be onboarded digitally. A lot of data sets, thanks to account aggregators, are available online. So this is allowing consumers to apply and get access to credit much more cheaply. All of that goes into acquisition cost. So definitely, yes, costs have come down.
Just one data point I want to understand, Anurag. Let's assume that there are 100 million credit card customers and that number is growing, no doubt about it. But do we also consider the cards which are not in action? Because there are higher chances that the people must have bought 2 to 3 cards and the cards are not used. So how many are the actual credit card customers who are actively using credit card? Is there any data?
So first of all, let me just clarify. 110 million credit cards typically belonging to 45 to 50 million customers. So roughly around 2 ratio. So that's not very large. Of course, there are customers who might have 3 or 4 cards. And why do people have multiple cards? There are various reasons to it. One, different banks offer different proposition on different cards.
Yes.
Some people take multiple cards from the same bank also because they want to get access to that some proposition. Number one. Sometimes people want more credit limit because they want to buy things on EMI and they want to get access to larger line, and then they end up taking multiple cards. So there are various reasons to it, and this is a global phenomena. We are seeing the same thing in India. Having said that, on an average, roughly around the portfolio will be around 50 to 60% active, and there is a nuance to it because it is the same consumer who is also using UPI. It is the same consumer who is also using net banking and debit cards. India consumer, what banks are doing, they are offering multiple choices to the consumers to do digitization of their payments, and this is what is reflecting in their actual performance. People have preferences. You will also see even UPI, people are carrying multiple apps in their app, in their phone, because they just say, on this category, I want to use this app. On this category, I want to use this card. So that's why one should not look at activation rate at a nuanced level, but it's a consumer product. What banks do, they work with merchants to create propositions so that they can keep influencing consumer behavior towards that. And the another angle to it is the affordability. I just want to, this is the third time I'm speaking because EMI is a very large opportunity on credit cards. What we have seen, it's a very unique market because in many markets, actually, EMIs are not offered on credit cards. But in India, it is offered. Not only it is offered post-transaction or pre-transaction, even at the time of transaction with the help of merchants and brands, the cost of financing is brought down.
That's a very valid point. Now, coming back to your partnership model, I will obviously learn from you in terms of co-branded cards. But what are the partnerships that you have with banks? You have partnered with a couple of banks and issuing these cards. How this partnership proposition is, Anurag?
So, as I mentioned, only banks are allowed to issue credit cards. So, we partner with bank. We offer our technology and services platform to them, and using that, banks offer to digital savvy customers credit cards, and we work with them to manage the life cycle of the customers through using our technology and services platform.
But is it on a revenue sharing model with the banks?
Yes, it is. It is on a revenue share model and differs banks to banks.
How do you see the whole co-branded space is shaping up? Like you said some time back, one customer might have 2 to 3 cards, and that's right. Somebody wants to have a travel card, somebody wants to have a food card, maybe, and banks are offering those kind of different, cards. Do you see that there is a huge scope specifically in the co-branded cards?
Absolutely. I'm like, look at the number of cards which are being launched by banks in partnership with merchant co-brands. Almost every large scale brands, be it physical merchants or the digital merchants, there is a co-brand, and this basically drives proposition to the end consumer. Even outside India, across the globe, co-brand is the single most important customer acquisition and engagement tool for banks for credit cards, and it's a cross category, be it travel, lifestyle, dining, shopping, almost every category. So this trend is here to stay.
Tell me something about your understanding, your learning about the market itself. How has the credit card customers' behavior changed over the years? Because we had seen initially, if you take an example of a decade, people taking credit card, using it and not paying, and then the recovery agents are coming. So those were the nuances and the major developments, challenges we saw then. Has the market changed in the credit card? Has the customers changed today?
So I would say, again, because I've been around for fairly long time, I've seen the era which you are referring to. And if you ask me, before I answer the question, the way consumers saw credit card was more of a occasional product. They won't use it for all the expenses. And also, to be fair to them, there are not many places where you can use the card. The acceptance was also not available across all the merchants and across all the categories. In last 10 years, thanks to digitization, acceptance has been solved. And what has happened, credit card has become part of day-to-day life. So that reflects in the engagement of the product, and that also reflects in the risk management of the product. When the customer becomes more and more engaged with the product, they ascribe higher priority to this. Needless to say, in last 15 years, a lot of risk infrastructure in the country has been created. We are the largest bureau market on the planet. We have 4 bureaus which are regulated, and the data frequency, data quality is very, very, very high. The frequency is very high. The consumer awareness about credit has gone up. And even today, credit card is still a very small product when it comes to penetration. The personal loan product, the two-wheeler loan product are much bigger. It has also created lots of awareness in the name of, in the minds of consumer about how to access credit. If I talk about self-monitoring credit score, which is a category which people talk, like people are themselves tracking their credit health. That number itself is more than 100 million Indians in the country are right now monitoring their score on their own, using different platforms, because it is available free of cost across various apps, including bank apps.
Yes.
So this credit culture of responsibly managing credit is a very, very important part of it. So I'm very hopeful about it.
Noted. That's very meaningful and good to see that credit culture is shaping up well, Anurag. Do you also issue the credit card to the new to the credit customer? And also, if you issue them, how's the ratio? You like the new to the credit customer or the existing customer who has used a credit card? If yes, also, what kind of credit score do you look at generally while, maybe?
So, frankly, it depends on the risk policy of the bank. As you know, the cards are issued by the bank. the risk policy is decided by the bank, and different bank have different risk appetite to issue cards against different score. And this is just only not score is not the only thing. There are many other things which banks look at. But let me answer to you a question from a platform perspective. We also offer, along with our partnership with our bank, a secured card. So as a platform, we have a product for everyone. So as a customer, let's say if you don't fit into any of the risk policy of a partner bank on our platform, you have an option to actually take a credit against fixed deposits created in a bank partner, and then build your credit history. And as you build your history, you will anyway will become eligible for unsecured credit card at a later stage, and you can upgrade yourself even to OneCard program or to some other card program, because this data is reported by banks to the bureau anyway. So I think that's where the whole thing come together. So the idea is that credit card as a product category has evolved from just being offered to few customers to be available to any Indians in the country. You actually can have an 100% approval rate if you want to really access this, and you can use this product to build a credit history, so that tomorrow you can access a larger credit. Like imagine, let's say I'm like a new joinee who has just started the job, and this is his first credit, and after a year they want to get access to, let's say, a auto loan or a two-wheeler loan or a large scale personal loan to, let's say, pay for his like higher education. All of that is possible because now they've built a credit history completely in their own hand, with the help of a fixed deposit based product.
That is meaningful. Now I have a very important question. Let me check how good your math is. If you could calculate and give us the answer, I think the readers will really happy with this. How many credit cards? How much average spend will make you profitable?
It's a very difficult question to answer, because as I mentioned that it depends on lots of nuances. What was the cost of acquisition, and also different banks, we have a different commercial structure. Depends on how much, what is the category of spends also matter, by the way. Are the people using it only for domestic expenses or overseas expenses? So very difficult to answer, but I'll tell you the way we look at it, I think, and that's not only us, every card business look at it. Unlike loan businesses where people take loans and they pay off loans. So there is a starting point, there's an end point. Credit card products tend to be a very long tenure. So most of the banks and platforms try to make sure that I remain in your wallet. Okay. And it's possible you might not use the card for a couple of months because you might got a proposition of some other card, there was some deal going on, whatever be the case, and I will climb back. So this is how it works. So it's a consumer engagement driven product. So, and that is what defines the long-term profitability of the business. Okay. And I'm like, it is, look at the big banks in India, they actually do a very large business in this. And they use this as a tool to drive customer engagement. And it actually, for many customers, where credit card is the primary tool, this product becomes the primary product for the customer engagement for the bank itself. Because the interaction with the product is just too many.
Now, let me just slightly shift your focus to the industry now. Every bank is today quite aggressive specifically on the credit card business. In fact, some of the PSU banks are also talking about launching credit cards, and few of them have already launched it. So which means that there is going to be a competition. That is part number one. And second part is, Anurag, the NPCI, after the UPI on credit, people can simply access credit on the UPI app itself. So do you see a huge competition?
Oh, we are very happy about it, because we ourselves have certified for RuPay and UPI. They are our partner. We process that. We are very excited because, simple arithmetic, Amol, the acceptance mark of UPI is much, much larger than credit card acceptance, number one. The UPI as a consumer payment product is deeply understood by Indians. The scan and pay, you don't have to educate anyone. So we are very happy about it. We already issue, on our platform, banks issue RuPay credit cards.
Okay.
Already issue that. And we have also seen that it has added incremental spends on card, because consumers are able to digitize even larger spends on this. So we are very happy about it.
And also perhaps you do not need to issue the physical card now because people are using that. So that cost is also going to...
Absolutely. It's up to the choice of the consumer. In fact, for many banks, consumers don't even take physical card. Even on our platform, they just take virtual RuPay card to access UPI.
Oh, that trend is also increasing. Wow.
Yes,
Interesting.
definitely.
So, what is the future of credit card?
So I think I'll tell you, credit card is a very, very large, category. And as the payment, and it basically thrives on growing consumption. Okay. So as the consumption pie grows, all the right ingredients are in place. So we have digital infrastructure of data through bureaus and digital identity. We also have acceptance created, and we have large bank balance sheets who want to issue credit cards. All three are very, very important. So I think this category is just going to grow big time. As I mentioned, in last 5 years, it has tripled, and it will grow. It will just follow the way Indian economy is going to grow. In fact, if you want to track the growth of credit card sector across markets, the cards per capita directly correlates to GDP per capita. So this number has been tracked for many countries, and India is poised to become the third largest economy in 27, and will double the GDP per capita from here on in next 5-6 years. So card business will just double from there.
Absolutely. So, what's the future of OneCard that you see, or what is the roadmap that you see for OneCard for next 3 to 5 years?
So so we will continue to work with banks. We have 7 bank partnerships. We would like to work with more so that we can expand the penetration of credit cards for banks. We have also launched a personal loan product in partnership with NBFCs and banks, and we want to expand that. As a company, we want to drive responsible credit behavior as a platform where lenders can use our technology and services to drive credit penetration for the country.
Fantastic. I think I'm done with all my questions, Anurag. Thanks for answering them. But I want you to just clear the cloud or help me understand one thing. I have been using credit card not as aggressively as perhaps you would like to, maybe sometimes once in a blue moon, maybe some foreign subscriptions. But I never got any free air ticket. I never got any free 5-star stay or something like that. But a lot of influencers will claim, buy this credit card and you will be able to stay in a Taj. You will get a business class. Is it true? Can this happen?
People have trained SLMs in outside India market on selection of credit card and which credit card should you use for which merchant, for which category.
Yes.
So this is real.
Yes.
But it is for select few. But definitely, I'm like, you should get more offers. If you continue to use it, rest assured, every bank is out there, because the banks are not looking at 6 months or 12 months relationship. They want to hold you for next 10 years. And this is the product which can create a relationship.
Sure. So let there be a relationship and let your business flourish, Anurag. Thank you so much for sharing those thoughts. Thank you so much for being part of Fintech
Happy to
Diary.
be here. Thank you for having me here.
Thank you. Thank you so much, Anurag. And thank you so much for watching this show. Thank you.